Welcome to PhillipCapital Market Watch. I am Devon, CFD Dealer from Phillip Securities. There is a common consensus for investors who believe in technical analysis. Stock prices on price charts reflect the activity of market participants, and we can interpret from the price chart what investors out there are thinking and how they eventually react towards the stocks. Today, I would like to share with you a price chart pattern that I found to be extremely useful. Introducing the Volatility Contraction Pattern, or in short, VCP. The VCP is a trading pattern that was popularized by Mark Miniwini, a successful stock trader, author, and speaker in the US. The VCP refers to a scenario where price and volume exhibit constructive behavior while supply is gradually absorbed from left to right within a price base. A VCP breakout occurs when the stock price moves through a pivot point, which becomes an ideal buy point for breakout traders. For your information, a pivot point refers to a specific price level where price is likely to make a large directional move. It's usually at the previous resistance price zone. Miniwini's success with the VCP is remarkable, as he successfully made significant returns by just using a VCP pattern. You may be wondering what's so good about VCP. If you are looking for stocks with growing momentum yet with low risk, the VCP strategy should definitely be your first choice. This is because the VCP trading strategy offers a greater risk-to-reward ratio that can lead to extraordinary profits in the long run. Without further ado, let us look at the three criteria that a valid VCP must meet. First, tightening contractions from left to right in a stock chart. Smaller price swings or fluctuations indicate reduced uncertainty or market indecision. When volatility contracts, it suggests that the market is entering a period of low volatility, which can potentially precede a significant price move or breakout. A valid VCP will have multiple volatility contractions, with the last contraction ideally within 10%. A pattern of higher lows is also expected during the formation of VCP. Second, strong underlying demand. Before the VCP forms, we would like to see a strong uptrend, which indicates the institutional investors are accumulating the stocks and VCP is just a short-term pause within the overall uptrend. Third, volume dries up and bursts upward. During the formation of VCP, we would like to see a declining volume as it indicates a lack of supply. Until the price reaches its pivot point, we would like to see a surge in volume, showing that institutional investors are beginning to accumulate the shares again. For better illustration, let me show you some examples where the VCP chart patterns were observed. One recent successful example of the VCP trading strategy is Netflix. Can you see a VCP pattern right before the stock price surge? It met all three criteria we just discussed. First, tightening contractions, where we can see at least 3 contractions which were getting smaller. And the last contraction was ideally less than 10%. Second, there was definitely a strong uptrend before the VCP formed. Third, the volume during the formation of the VCP was declining, and when the stock price broke its recent high in the last 2 contractions, the volume surged. This is a successful example of a VCP. Today, the share price has risen as much as 28% since its breakout point at the price of around $349. Did you know that VCP can also be applied across different markets? Another successful example of the VCP is Singapore Airlines, or SIA, which is listed on the Singapore market. We can see 3 tightening contractions with low trading volume and eventually a breakout of the recent high with a surge in volume. The 2 examples above show you how the breakouts can occur at different price resistance levels. They can either break the all-time high or just reach below the all-time high by breaking its recent high in the last contractions. Now, do you see how powerful the VCP trading strategy is? Of course, not all trading patterns are always going to work. As a breakdown example, let's look at Ford Motor in 2019. After the share price surged and formed a VCP for a short pause, it broke out of the price high in the last contraction with a surge in volume. However, the breakout was not successful in the days that followed. Sometimes, there are exceptions because many factors could cause a stock price to drop. Thus, it is crucial for us to set an initial stop loss before entering a trade. In the case of Ford Motor, if you were buying at the pivot point on the last contraction, you might set a stop loss at the low of the last contraction in case the setup fails. Now, I'm going to show you some trading opportunities that I recently found using the VCP trading strategy. Looking at the weekly price chart of Costco Wholesale, there's a possible formation of a VCP recently. At least 3 to 4 contractions were shown, and the price just broke its high price in the last contractions with a surge in volume. A price correction is expected, forming the suggested level of entry price at around $512 to $531 with a stop loss at the low of the last contraction. Another trading opportunity that I found using the VCP trading strategy is on Yangzijiang Shipbuilding. A possible VCP formation is shown looking at the recent price movement. However, as the share price has already risen by 14% from its breakout point, we are anticipating a price retracement to its previous resistance level between $1.35 to $1.40 Sing dollars before we can enter into a long position. Do note that share price movement can be caused by many reasons. The VCP trading strategy is a complementary tool for investors to refer to when performing technical analysis. We are not recommended to make an investment decision by solely depending on one trading strategy. Considering other factors such as macroeconomics and the fundamentals of the company would definitely help you make a more informed investment decision. That's all for PhillipCapital Market Watch. Thanks for watching. I hope my sharing helps you make profitable trades along a trading journey. My name is Li Wen. Do remember to like and follow us on our social media handles and subscribe to us on YouTube. See you soon!